Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, guys, I finally solved GameStop's used business. Okay, so GameStop forever, for all of its financial reporting, has listed one line as their used business, their pre-owned business. And then in 2018, 2019, they shifted their reporting to then delete that line and then just tell us their total hardware plus accessories, their total software business. And they also deleted an other line that was a combination of PC software and electronics hardware, aggregated all of those together. And I've always wondered how much of their used business was software, how much of their used business was hardware on a percent of revenue basis, because that can help us a lot in modeling the future margins and even the current margins. And also, what margins do they get on their used software versus what margins do they get on their used hardware? I finally figured it out. I'll show you the numbers. Before I get into it, cool channel update. Received October's payment. Okay, so I don't know if you can see it there, but Google paid me $428.18 for the month of October. So way to go, guys! Thank you for the support. And there you go. Transferred it over into Fidelity, and we were able to scoop up 21 shares of GameStop. Not financial advice. Okay, but this channel, all the earnings go to DRS Book GME shares. So once I'm able to have those shares settle, I can initiate that DRS transfer. But check it out, guys. You guys, through your watch time, through educating yourself on this company, understanding the fundamentals, not getting lost in the sauce of the stock price when the stock is fake, but focusing on the business and understanding that long term, the stock price will reflect the fundamental value of the business. You guys, through your education, have helped the business and helped me by locking up 34 GME shares. So basically, you've already given me $34 million. And how much more could I really ask for? You know what I mean? Um, so thank you for that. Thank you, of course, the subscribers on a march to 2525. And thank you to those who have joined as fans and friends of the channel. Okay, let's get into GameStop, understanding the nitty-gritty of the business. So a little bit of recap. We know with certainty what the revenue split and margin split was within their other business in 2015 and 2014. We know this for sure. Okay, go watch my past videos if you want to learn more about it. This is important because these trends, a couple things important here. Two things we see from 14 to 15. We see a trend, a couple things. Well, so PC software margins relatively stable, but potentially trending up a little bit. Electronics margins going up substantially while the revenue's coming down substantially from 14 to 15. We also know that originally, right, in the first year of GameStop splitting out their mobile and consumer electronics, that first year in 2011 when they only did 12 million in revenue, we know that the margins on that were 27%, 27% in 2011. So as it relates to these trends, it's likely that as GameStop was backing out of the electronics scale narrative, right, and reducing it down to something that was similar to where they were when they started, a smaller portion, right? So it's going to get even smaller and the margins are going to keep climbing even higher. Check out what we can do in the 2016 and 2017 years. Okay, we know these tech brand numbers and margins with certainty, and we know these PC and electronics margins combined with certainty. And then we know the combined PC electronics and tech brands numbers with certainty. Okay, so you use the historical electronics and PC software reference margins as a reference. You use the known combined margins for 16, 17, and 18. And then you use the direction of the shrinking revenue, increasing margin electronics business, combined with that 27% reference point we have from 2011. And you can kind of solve for the split of electronics versus software in 2016 and 2017. We know PC software ticked up at least a little bit because the total PC and electronics combined was 31.5% in 2016 versus in 2015 combined at 27%, right? So we know even with electronics coming up, electronics hardware, right, did not all of a sudden become 35% margins. In reality, more likely, PC software continued to tick up a little bit. And you get a margin software that from 16, electronics margins from 16 to 17 to 18, ticking up a little bit each year, right? 25, 26, 26.7%. The electronics revenue going down from what it was in 2015, about 118, down to 60 in 2016, 55 in 2017, 38 in 2018, right? So a continuation of these trends. Meanwhile, what does that imply for PC software? Again, assuming that that 33% bump was a little bit of an aberration, that they don't, I mean, these are new games, so they can't just infinitely continue improving on these margins, right? GameStop is pretty limited. So assuming that came down a little bit, 32.5 down to 32, and solving for the margins that they get from Simply Mac around 25%, knowing that the tech brands portion in 2018 was 100% from Simply Mac, right? It ends up mathing out this way. And basically, you could say like plus or minus, max, you could say plus or minus like $10 million, right? As far as the split between PC software versus electronics within these other totals in 2016, 17, and 18. So then, what do, right? You match 2017 and 18 with the new categories, right? This is 2018 and 2017 back referenced on their 2019 10K, right? And this is what they were as they were reported on their original 10Ks, right? So the total sales numbers line up exactly, but the split changes. So with this information up here, we can then puzzle piece together what did the used business look like? Because this is what I want to know more about. This is the line that I wish was already split for us, but it never was in GameStop's history. But now we can actually solve for it by splitting out everything else. So you have hardware, accessories, and other, which is, again, their hardware plus their accessories plus the hardware portion of their other business, aka electronics plus tech brands. Originally, I thought perhaps tech brands, they split out the software portion of their Cricut sales from the hardware portion of their Cricut sales, but that is not the case. And you know it's not the case because these numbers break down perfectly with what GameStop has already communicated in their 10Ks. But you end up with, boom, here's the used split for software and hardware 2017 to 2018. What does that mean? With the known used revenue numbers for used software and used hardware, we can then solve for the gross margins on used software versus the gross margins of used hardware because we know the combined gross margins, right? So in 2018, the gross margins combined for their pre-owned was 43.4%, and in 2017 was 45.5%. So we know the sales of their total pre-owned business. We know the margins of their total pre-owned business. We know the profit, therefore, of their total pre-owned business. And now we know the revenue splits of their pre-owned business, right? Plus or minus maybe $10 million, right? A very high level of clarity, right? So then what must the margins be on software and hardware mathematically, if they stay the same year over year, which obviously they didn't stay exactly the same, right? But we're trying to get a pretty good idea, right? If they stayed the same year over year, what are the margins for each portion to get you to a 2.1% total gross margin change year over year, in light of the fact that the percentage of the sales coming from hardware increased by exactly this amount or almost exactly this amount, you end up with basically a 57% gross margin on used software, 29% gross margin on used hardware. Does this check out mathematically? Well, if anyone went to GameStop in the 2010s, you know that they were getting these types of margins, right? Because you know what they offered you, and this is why GameStop got such a reputation, right, for uh, being a little bit rough on their video games, right? It's like, okay, I'm going to get $4 for my PS2 game, but I see it right there on the shelf for 29, you know? So come on, this is a little rough, right? Now and then hardware, not as frequent that GameStop would get such a bad rap as like grossly underselling consumers. Why is that? It's because there's a larger market for used hardware, right? There's more people looking to get money for their consoles because they know what the consoles are worth. And therefore, you have other resale sites such as eBay that you can kind of benchmark against and say, is it really likely they got 29% on their used hardware? It's like, well, yeah, the industry generally would pay someone 55 to 65% of the resale value to the seller, right? So there's 35 to 45% hypothetical wiggle room, but then you have to factor in refurb costs and potentially some distribution costs, etc. So again, the financials tell us this is what the margins are. The logic says that this checks out. What do we then learn? A couple things we learn about the businesses as a result of this. As it relates to hardware, what percent of the pre-owned business is hardware? In 2017, it was 41% versus 59% software. In 2018, it was 49% versus 51%. What does this mean as we think about the current business, right? What are the implications? What are the trends? Basically, hardware sales, used hardware sales, pretty stable, right? Right at around 900 million both years, but increasing as a percentage of the business due to declining software sales. So proportionally, the percent of the used business that is hardware versus software most likely is continuing that trend over time. And again, you can see it solving for present day gross margins, but this is what we could infer, what we could begin to imply, project. And then what percent of the hardware business is pre-owned? This is super important as you think about the current business, because the current business, all it tells you is hardware, right? So man, of that 345, right, $345 million in the first quarter of 2025 is hardware. What percent of that is pre-owned hardware? What percent of that is new hardware? And what percent of that is accessories, right? And how do we know, right? The way we know is by math. That's how we know. But in 2017 and 2018, very steady, right? Of the hardware business, the total hardware business, the pre-owned portion was right at 24.5%. Now we should net out tech brands, okay, because that is not a part of their business anymore. And in 2017, tech brands was $126 million of their hardware revenue. And in 2018, it was 45 million, but it's gone. There ain't no tech brands anymore. So you net that out, it goes from 25% to, and a half down to, 0.5% less in 2018. Now, if you net out accessories, again, pretty stable around that 33%. And what does this mean? Overall, used hardware demand is relatively stable as a percent of total hardware demand. What does that mean? It means the pre-owned business is proportionally just as desirable as the new business as it relates to hardware and accessories. We do not see a declining pre-owned hardware business. The demand for used consoles is still there, right? For every, whatever you could say, for every 3 consoles they sell, 2 of them will be new, 1 of them will be pre-owned, right? At least that's the trend then. And then we can do some thinking in a future video on, is there any reason why any of these trends could have changed, right? But what do we learn about the software business? What percent of the software business is pre-owned? In total software, it goes from 29 down to 25. Now, if you net out the digital sales, the drop is a little bit more modest. Maybe, yeah. I mean, really, it's still just about the same, but slightly more modest. If you net out PC sales, then again, you see net out PC and digital, I should say. These are cumulative. Then again, the decline goes from about a 5% decline down to, it's only about a 4% decline, right? But several trends to take away from this as it relates to the pre-owned software business. One thing is both new and pre-owned are declining, but pre-owned is declining faster than new. So as you think about the current day software business, a higher percentage of this software business sales is new software compared to used software if this trend continued. GameStop mentioned that one of the reasons for this decline in the used business was because the shift of software to digital actually was hurting their used software business even more than their new software business. In other words, GameStop could actually sell new games still not as well as they could before, but relatively it was less impacted than their used sales. And actually, the used software business suffered more because people could play the old games digitally, right? You could get digital access to older titles. And so that hurt the used business substantially. What else do we learn? Digital sales are relatively stable, but growing as a percent of software revenue due to declining software sales. And similar with PC, potentially stable, but PC did have several strong releases in 2018. So PC software maybe not quite as stable as digital. But look at digital, right, from 2017 to 2018. 189 in 2017, and then 194 in 2018. If you look at digital historically, all the way back to 2012, it's 204, then it's 218, then it's 216, then it's 189, 181, 189, 194. Digital sales, it doesn't seem like this. It seems like GameStop gets the money that it gets for digital, and that it's not a huge growth or hugely shrinking portion of their sales. Now we know the current business. Ryan Cohen has said plenty of times that their ability to compete in the digital space is limited. And I think what he means is it hasn't changed much, right? We can get some digital sales, but we're just not going to get a big slice of the digital pie. But I don't think there's any reason to think that GameStop's digital sales on a dollars basis are substantially different than they were historically. And historically, they weren't really declining much, right? From 194 in 2018, from 208 in 2012, compared to, right, the software business, the new software from 36 down to 24, right? So you see a 33% drop in the new software sales business over this time, and you see like a less than a 10% drop in digital. So what do we learn here? Okay, digital, relatively stable, and probably still a relatively similar size today, meaning a larger portion of today's overall software business. And then again, the PC software sales is up here, but you see 2016 estimated at 238, 233 estimated 2017, and then a 259 estimated in 2018. Now, we do know that the overall PC software business grew like 18% year over year from 17 to 18 due to several strong releases. That's why I don't think this is a reversal of a downtrend, because again, the years before that, PC software 285, 324 the year before that. So PC software definitely still declining. And probably this is just coincidental that it had a bump year in 2018, but perhaps PC software declining just ever so slightly less than video game software. Overall, though, probably a similar pace of decline. Because again, you see that 233 in 2017 compared to 324 in 2014. You're looking at about a 33% decline, consistent over the PC software as well, unless you happen to be in a year where there's several new releases, right? Awesome implications, awesome things to learn. Did you learn anything? Okay. If so, let me know in the comments. If you haven't learned anything, why haven't you? Okay. But what's so exciting about this is that we can then put together all the pieces for the current business, right? We can re-break out GameStop's hardware, software, and collectibles sales by their parts, better understand the margins for each line, and then better understand GameStop's current business and gross profit numbers. So again, my channel is not here to pump the stock. Okay? I'm not here. I like talking about the stock sometimes. Okay, I'm not here to not talk about the stock. But I think sometimes, particularly when we're in times like this, particularly when we're in times like this, particularly when we're in times like this, it's easy for GameStop investors to get very, very restless and talk about crime. And then what you want to do is find the hidden secret message. Like, what's the meme? What's the model? Like, how do I know what's going to happen next with the stock? How do I know when it's going to go up higher? And there's a growing resentment during times like this towards the fundamentals of the business, right? There's more and more negative comments in my YouTube videos talking about why are you talking about the fundamentals? It doesn't even matter. Or comments that aren't necessarily trying to be negative, but like, when is the price going to go up? And I'm talking about trailing 12-month income is about to 5x over the next 2 quarters. And from right now at 100 million trailing 12-month, in just 2 weeks, it's going to almost triple. In another 3 months, it will have almost quadrupled, right? And then another 3 months, it will have almost quintupled. So it's easy to think, oh, the fundamentals of the business don't matter. But the reality is, GameStop's stock suppression for all of these 5 years, 2021, 22, 23, 24, all of those years, it was a technical suppression, not a fundamental suppression. The only reason GameStop should have been trading higher, and it should have been, but the only reason it should have been is because of all these years of the company being intentionally destroyed from within and short sellers pouncing on it, and then the story getting reversed due to Roaring Kitty and Ryan Cohen's buy-ins, right? The bankruptcy story of GameStop was basically permanently terminated, which means shorts were going to have to close, right? And we know the buy button got turned off. We know the squoze should have squoze in higher, right? The sneeze, whatever. But there was no fundamental case for evaluation of GameStop a single cent higher than it was trading for years. Now, what happened in 2024 is you knew that right? These numbers that got released in April of 2024, you could officially know that the turnaround is really turning around, but you're still, if you're buying that company then, you're still buying it years in advance of being undervalued fundamentally. You're buying it in anticipation for the growth that's to come, right? But you're buying it at a 500 PE, right? You're buying it at Palantir level PEs, and it doesn't operationally make any money yet. Like it hasn't been fundamentally suppressed yet. It's actually finally reverting. It's been technically suppressed, reverting to a fundamental fair value that is about to get destroyed, right? The fundamental case for GameStop is about to 5x. And so I do expect the stock price will appreciate, not necessarily 5x overnight, but certainly I think the fundamentals of this stock matter. And for me, anyways, when you're going through times like this, it's helpful to look at this, right? How do I know what's really going on with the business? Why why should I say it's undervalued, right? Why should I say this is suppression other than I'm annoyed that I've been holding these shares for 5 years? Other than I'm annoyed that I've lost money on call options, right? Why should this company be undervalued? The more that you focus on the truth of the company, the truth of the numbers, in my opinion, the stronger conviction you can have towards holding your shares, towards buying more shares, right? Towards being that much more clear in your conviction for the future prospects of this company. The more that you focus on what's the stock going to do today? Is today the day? Is today the day? The more that you can become demoralized, psychologically warfared against, gaslighted, and thinking, I just can't take it anymore. I'm just going to sell it out. I'm tired of this. And man, you're welcome to sell your shares. Okay, this is not financial advice, but I would just encourage anyone that feels that the fundamentals don't matter. My encouragement is why don't you just wait a couple more months and find out, right? Because the fundamentals, PowerPacks hasn't even reported 1 quarter yet, right? Ryan Cohen has said it's that collectibles are going to be a third of sales, right? So we know, unless he's lying, that it's doing hundreds of millions of dollars in revenue. But why don't you just see a couple quarters of fundamental astronomical growth happen and just see if the stock actually is suppressed beyond its fundamental value, right? If it's being fundamentally suppressed, or if actually it's just been technically suppressed, but only down to its fundamental value. But as that axis shifts and the fundamental value breaks out, could that be the catalyst to force the technical suppression to unwind as well, right? I certainly think so. It's certainly nice to be investing in a company that's deeply undervalued. I like that. Okay. I feel like I'm being kind of preachy. Sorry for that, guys. I'm not upset at any of you guys. Y'all can do whatever you want with your GameStop shares. You can watch this ticker as much as you want. You can look at this spreadsheet as much as you want. You can watch my videos or not, or look at GameStop's 10Ks or not. It's up to you. It's up to you, boys and girls. But this is how I reconcile the difficult times, is to focus on the truth. And if you're in my comments saying the truth doesn't matter, then I would just say this is probably not the channel for you because, again, this channel is focused on level-headed analysis of company fundamentals. Not pumping the stock, right? It's not what I'm focused on. I like a meme every now and then, okay? But it's not what I'm focused on. I'm focused on level-headed analysis of company fundamentals. From my perspective, being a financial advisor who's independent, who owns my own firm, I'm here to talk about business performance, growth potential, risk analysis, stock valuation, personal finance, and more. Thank you for being here. Genuinely, thank you for being here. No pressure, of course, ever to contribute financially. All the content's for education and entertainment purposes only. Right? This is what I'm about. This is what the channel's about. If you want to know this company, you want to know the fundamentals, that's what this company's about. And if you think this is about to squeeze, right? If the fundamentals really are the catalyst, and the fundamentals really are 3x, 4x, 5xing in the next 1, 2, 3 quarters, then you might want to have a really clear idea on what the fundamental value is, right? I don't know. I don't know. Anyways, I'm excited, guys. I'm excited that I finally solved this stupid puzzle because it helps me understand this current new breakdown of the business so well. Super pumped to show you the implications. We'll save it for a future video. All right. Let me know what you think in the comments. Leave a like, sub if you want. I'll see you in the next one.